This is eSec Lending Insights. Let's get over to our episode.
All right, Brooke, what are we talking about today on this podcast?
What should we not talk about? June is on fire, right? In the best of ways, in the worst of ways.
A little bit of both.
There's a lot going on.
I guess depends on the seat you're on. Yeah, June's on fire.
In the best of ways?
I don't know. You said it. Explain it to us. You also said, what should we not talk about?
Yes. Do you have any categories to throw in there or topics to throw in that bucket?
Nope, but it's interesting.
Okay. All right, guys. Back from a big week last week. Did you think that you officially successfully hosted the market's best event of the year? Is that too much?
It's for the listeners to tell us.
Do I need to back off of that statement?
Yeah. What other ones are in contention? Like, who's our competition?
I don't know. I guess that's a good question. Yeah.
Any newsletters or feedback submitted via the eSec Insights listener communication loop?
Yeah, how's that been going, Brooke? You've been getting really good questions?
I haven't received as many questions as of late, which listeners, I'm super disappointed in all of you. This was your opportunity to make this more interesting. So the fact that no one wants to participate in that, I'm just going to point the blame right back in the listener's direction.
Did you literally get none?
No, I legitimately got the 3 or 4 or whatnot. But beyond that, no. Hey, everyone, listeners, I'd like to let you know that if you go to eSec Lending's website, in the podcast section, there's a button where you can submit your question. You can submit any question you would like. We'll be the judge of the question and whether it's appropriate or not to share on the pod. You don't have to attach your name to it. It can be completely anonymous. And we welcome any feedback or interesting questions on the market, on eSec, or frankly, anything else.
As someone with young kids, by saying what you don't want to happen, appropriateness, you're inviting the other behavior.
Do you think that I'm... Hello? Do you know me very well?
Yeah.
I'm nothing but intentional, Mark.
Yeah, gotcha.
We'll still be the judge of everything, but some fun listener questions will make this a little bit more interesting. Keep the pace up. Okay, let me tell you this. These were my ideas from last week. I attended a Women in Securities Finance event in New York last week where I was a guest to an ongoing event that the New York chapter has been hosting called Toastmasters. It's an international program that allows people to focus on public speaking skills and techniques. And it was a great event, really well done. They start out every meeting with an icebreaker topic. You go around the room, you do an icebreaker, and later in the meeting, there are rapid fire questions that someone comes up to ask the speaker some random question. And I thought...
Excuse me.
I thought it would be great to start with some sort of an icebreaker with you guys on the pod. Or random questions. No.
See?
This is the awkward.
Yeah.
Okay.
Yeah, you like it, don't you?
All right. Lean
Do
in.
you get the questions when they're submitted? Do you get them real time?
Yeah, well, they come through when they're submitted, so I guess that's real time. Do you want to actively submit one right now?
No, I just think you should keep an eye on it during our podcast and see if people submit questions, and you can say, "Oh, we just got one."
Okay. We're not live, though, Jim.
I know that.
Okay.
Just submitted one.
Okay, great. Anywho, where do we want to start? We have SpaceX later this week. We have Russell rebalance activity. We have a new Fed chair in place. We have continued disturbance in the Middle East. No true end there. We have auctions happening left, right, and center. We have massively high volumes at the moment.
I say we start with bonds.
Okay.
Because bonds are what make everything else go.
It's what makes the world go around.
I can kick us off. It continues to be very Middle East driven. We continue to have no resolution out there. Continue to see inflationary pressure starting to seep in from the energy crisis. Look at the 10-year yields now somewhere in the 4.55 range. Part of that is just some of the moves in the overall cash market. Some of it is forward rate expectations moving higher and higher. I think we're getting to a point where even a new Fed regime that probably wants to lean dovish, or at least that's what the administration, when they proposed him as the new chairman, was thinking. But the data in the macro environment probably does not allow for that right now. All the data that we're getting recently, whether it's the payrolls number from last Friday, we'll get some new and fresh inflation data this week that might cause some knee-jerk reactions. The Fed futures markets continue to go north from a rates perspective. I think right now we are seeing a little bit north of one tightening priced into 2026. So the first move people are thinking is going to be higher, not lower. Obviously, there's still some bias among Fed voters. There was a few dissenters once again, basically saying let's keep the rates on hold, but let's eliminate downward language from the press release. So I would say that's definitely a hawkish pause more than anything. So right now the market's in a standstill. I think it's going to be very data dependent, as we've been for really the majority of the year. It's making the investment landscape a little bit more challenging. The Middle East is creating large volatility in both cash global bonds and equity. So the marks are something that we're dealing with from a cash reinvestment perspective, but also you have investors still very wary to add duration to the portfolio and not get paid properly for maybe the next move being higher, and then they go higher, then the break evens are all out of whack. So depending on the timing, the duration you're looking at, and your conviction on what the next move is, all depends on your next move. I think money markets continue to see inflows driven by some seasonal impacts and how much cash is in the front end. I do think there's a big part of it is a flight to quality, not wanting to play the guessing game on the Fed curve. So for that reason, we continue to be in a fairly stable repo environment. So funding our Treasury book continues to be favorable for those long Treasuries, albeit we're starting to see more volatility. I think June should be another friendly month, but as we move to the back half of the year, the supply picture is going to turn inevitably at some point. Dealer balance sheets will continue to get bloated. Even the most recent dealer inventory sheets are seeing a big spike up in usage. I do think we'll start getting turned away some, or at least be higher from a price and rebate standpoint as we move through the year. Volatility in the repo market doesn't always mean stress in the repo market. Feels like some of the infrastructure is better in place this time around with some of the various facilities, adjustment on some of the benchmark rates. It feels like the market is in a good spot to absorb some of this new volatility, but obviously a lot of uncertainties and a lot of different levers at play here. But we still feel pretty bullish and pretty positive about kind of where the books and portfolios have hung out so far this year. And it's pretty crazy. We're already halfway through the year. So I guess we're just going to keep chugging along there.
One quick question for you, Brooksy. Is the curve steepening on the short end? 2 years in, are we seeing steepening? And can you talk a little bit about what that does to the challenges either in the cost of funding or on the reinvest book, just from a pricing standpoint?
Yeah, I mean, I would say people tend to look at the 210 spread as the base case for
steepening or flattening.
Yeah, and also recessionary indicators. I think people think when that inverts, that people are demanding higher yield for shorter tenors means that there's a higher likelihood of a recession in the short term. Right now, that's probably 30, 35 basis points positive. So it's still a positive yield curve, upward sloping, as tends to be the case in normalized times. I do think we are starting to see a steepening, and it's in the short sector, the 2, 3, 5 year part of the curve, and that's driven by short-term expectations on interest rates. We've had pretty big moves the last 2 to 3 weeks on the expectation of what the Fed's going to do this year and then into next year, basically fully pricing out cuts, first of all. Then we went through a period where people thought we were going to hang at the neutral rate for a while, and now you're starting to see a tightening narrative seep in. So that's definitely impacting the shorter part of the curve more than anything.
Thank you.
Mark, how are you? You're
good.
surviving? You're not quite to the mid-month mark yet.
No.
Still plenty of June to go.
Oh, yeah. I think like Mike said, it's going to be pretty intensive month for balance sheets. We heard anecdotally from a few counterparties. They're preparing for the 3 events, and then there's quarter end too, right? So, which is really in the back of everyone's mind. But at the forefront, you have SpaceX, the Triple Witch, and the Rust Rebel. I think the Rust reconstitution is expected to be 2 to 3 times larger from a notional year-over-year perspective than last year. So when you think about the amount of chaos that brings to supply, and usually we see our peak hard to borrow environment right around now every year, IPOs and special sitch aside, So 2 to 3 times larger makes sense since valuations are higher.
Is that the main reasons? I mean, are there other factors that make that rebalance larger other than movement of the markets?
Yeah, it's both. So valuations doesn't explain all of it. It gets you some of the way there. Then the other part of it is the relative changes year over year as a result of volatility in valuations too.
Okay.
Like some sectors seeing appreciation
More
well
or
beyond
less and
others.
sure,
Yeah.
sure. Okay. Higher
Great.
weightings on certain sectors or companies and lower on others, and the overall move makes it bigger than prior years.
Yeah, everyone's preparing for this month. We heard from a number of borrowers that it has management's focus. They're having strategy meetings well ahead of it. People are getting sheet aside. One borrower told me they've had a lot of support from management as far as resources, and then they think they're getting 6 months of runway and ends up being 6 weeks. It's a great problem to have, and it seems to be something that's being experienced across the whole community, whether you're a counterparty, whether you're a borrower or a lender. Everyone's seeing higher volumes and higher loan balances as a result of the valuations and the backdrop in the market right now, which PB research suggests that gross leverage is at or near 5-year highs. Coupled with valuations and where net leverage is, it's been a really healthy environment. We're seeing a lot of flow right now.
I know you don't have a crystal ball, but would you expect sort of a month post the rebalance? And I appreciate SpaceX maybe is the big unknown, but would you expect volumes to come into more normalized levels and be less bloated a month later? Or do you think it's something that happens later in the summer or pushing towards the end of Q3? What's been the historical norm? Has it come in pretty quickly in terms of peak
Fees,
balances and fees and such?
yeah, last 2 years, fees have topped out around July. Some special situation trades have moved it around, and we've seen highs touched in August too, but usually that average fee on loan tops out around July. As far as volumes go, you would think it might pause. I think the S&P 500 was just up 8 straight weeks, so that can't continue forever. I think with lower market appreciation, we'll probably see volumes tick down a little bit. If they just go flat, that wouldn't surprise me, right? And then we see things move higher again in September. You would think the pace of things the past month probably can't happen forever, but it's tough to tell if and when.
Sure.
Then IPOs too. SpaceX is getting a ton of attention, deserves a lot of attention. But there's a handful of other names that have come to market the past week or so as well. Like half a dozen or so names that are more your traditional type IPOs. QNT is coming to market via SPAC, the pipe offering. There's some interesting structures and companies that look more like the traditional IPOs as opposed to large private companies. Those are all going to hit the market too, and it's a super friendly backdrop for those. We'd expect to see those trade hard to borrow as well.
Good. Okay. And so maybe a refresh for listeners, the expectation on timing of seeing some of those IPO names trade hard to borrow. Traditionally, it took a bit of time because of lockups and access to the positions and such. We think in the case of SpaceX, that could be different, given that some of the indices will pull it in sooner. Any other commentary? To the extent that there's a lot of IPOs happening now and in the near term, is the potential windfall to the market on a delayed 30, 60, 90-day basis, or is it too much of a mix and can't really predict?
Typically, peak fees are close to the end of lockup, so I would expect to see it throughout the summer. Usually,
Okay.
things don't trade their hardest in the first 30 days. We're hearing from different participants that people are even looking for SpaceX funding for the first month or so. To the extent that that trade exists, that kind of implies it probably shouldn't trade hard to borrow. A lot of it depends upon performance in the cash market. We'd be reactionary to the cash market in that sense. Peak fees will probably be July, August for some of these names heading into lockup.
I think there's a lot of unknowns on this one in particular. It's pretty widely held on the private side. You don't know how that manifests itself once there's a public market and it's IPO'd. Almost every bank is on the deal in some form or capacity, and what that does to each of them, it's hard for me to tell. Just there's no common denominator, whether it's going to be well bought or well short. I think probably both, but we're going to have to wait and see on this one. Next week's going to be really interesting. Today's the 8th, Monday, and we're recording it after the NASDAQ went down 1,100 points or whatever it was last Friday. So who knows what's going to happen, Brooke? It's kind of a guess, but all hands on deck to make sure you can try and fund it if it needs funding, extract the value if our clients own it and we want to get it out.
Good. Okay. Great. What else? Do people have the bandwidth and the attention to focus on other things outside of the Russell Rebal and these pending IPO names? What else is going on in the equity space?
I mean, I can't speak for the market, but we do. I'm just kidding. Do they have the bandwidth to listen to this podcast too? It's part of the question.
Well, everyone needs to fall asleep at night. Though.
Yeah. Yeah, to Jim's points, we had the sell-off on Friday, and then it was a lot of red, which never makes you feel good. But one of the talking heads on CNBC said, this only brings us back to the previous Wednesday. So when you say it like that, it's not like we erased the months of gains or something. And it really puts things in perspective. US equities spent last week near record highs. They rotated away from some of the biggest AI and semiconductor winners into some of the more traditional value sectors like healthcare, industrials, financials. We're going to be at the whim of the market, but it's green again today. It seems like there's still that bid for the growth part of the market. And that's really where we've seen a lot of the value come in, because I talked about valuations increasing and how that buoys balances. Obviously, you don't want to panic sell as far as gross leverage is concerned, because that's been an important part of the backdrop. It sounds like new risk is coming in pretty well hedged. We'll talk about net leverage being that 50th percentile, which is important to us. You want to see a balanced trade. We continue to see demand for secured funding, all those other structures that we care about, whether it be non-cash, even more traditional, boring non-cash like bilateral treasuries. We're seeing a big pickup in demand for that to help dealers manage sheet ahead of quarter end and all these events. Asset seg, LCR, or secured funding type trades. As people approach limits or people optimize, all these trades come into focus and have a particular amount of value. I think you want to be well positioned. You don't know if and when you're going to be able to capitalize on all these. I think increasing markets has helped push these structures to the forefront more than they were already.
And how about the corporate bonds area, Mark? Same high level story. You're still seeing high volumes there. Are there any counterpoints happening in the corporate bond space than what you're seeing on the equity side of the business right now?
Jim, what do you think about U.S. credit?
The borrowers are still there. There's still a need from our counterparts to borrow. IG and high yield, Brooke, still feels pretty healthy from that perspective. But with treasuries backing up like they are and yields going up and credit being a spread product, I would say they're hashtag winning, the guys shorting those bonds. I would imagine it continues. We'll have to see what kind of summer we have with equities. It is a good rebound today from last Friday, but all it takes is a couple of down days and we're suddenly into a cycle where we're net selling. And then I would think credit has to come under pressure at that point, kind of next up in the cap structure as you go up. Hey, Mark, we never really talk about crypto, and nor is it our bailiwick, but was Friday's sell-off?
Do you think people that are into crypto also use the phrase bailiwick in a regular,
I don't think anybody under the age of 70 uses the word bailiwick except for me.
Okay.
And I'm pretty close to 70. Thank you for pointing that out, Brooke.
No worries. But let's talk crypto.
Did crypto cause the equity sell-off, or the vice versa, or are they just lockstep? You have any opinion on that, Mark? I know we're not experts on it.
Yeah, they were talking about that on TV too. I think the important perspective on crypto right now is it was already 50% below its all-time high, as large caps and even the Dow was hitting all-time highs. So the retail market and crypto market was already pretty frustrated. So while there was a move lower and MicroStrategy announced they were selling for the first time in history, then they've subsequently announced they're net up. They made a purchase over the weekend, and we saw the rebound of 63K today for Bitcoin. But it was already 50% below its all-time highs. The speculation with crypto has been that it's been net sold because people wanted to buy equities. You're out of marginal dollars, and people that want to invest in high beta or retail have been net selling. They're positioning for SpaceX and other IPOs, and they want to participate in the AI trade and data center trade and everything that's gone up since the end of Q1. I think that's been the idea there, but I don't know as far as the most recent sell-off. Seems like when the market's down, crypto's always down more. And when the market's up, crypto isn't necessarily up. The theory is that it's just people are selling to buy equities.
Yeah.
Which makes sense.
It does, yeah.
Yeah.
All right. Well, my icebreaker question of the day, if I had felt confident enough that you wouldn't hang up on me at the beginning of the podcast, is what is one thing on your bucket list?
In life, I want to play golf in Ireland.
Ah, okay. Good.
Never done.
I want to go to Japan. That's the new thing that I'm trying to book for next year already.
All right. Ticking things off the bucket list sooner than later. Good.
He's very efficient. Mike's bucket list is actively being chipped away at.
I've been thinking about it for the last couple of months. So it's actively being chipped away at from the sense of setting up time next year and building the points for the flight, which is key.
Okay. McNeil, bucket list. One thing.
Yeah, I'll say a hole in one. So that way I have to continuously golf more and more until I get one.
Okay. I like it.
So if I'm in my bailiwick stage of life and I have a hole in one, I'll have to golf every day.
We have a new phrase for backside when you're on the last few holes in life. You call it the bailiwick stage. How about you, Brooke?
I have lots of bucket list things. I really want to travel to Africa, do safari, see a bunch of places there. I'll keep it to one. That's one thing I'll share. How about that?
Okay.
All right. Okay. Listeners, if you didn't like my random icebreaker question of the day, feel free to submit more questions into eSec Lending via the website. And with that, anything else, you guys? Any other closing remarks?
Brooke Gilman's random icebreaker question of the day brought to you by
Public service announcement.
Jim and I are going to be podcasting next week from Isla. We have a surprise guest, a friend of the pod and someone that is familiar to the pod. So listeners, I think you'll be pleased and excited, and hopefully it'll be a good one that will get out shortly after we record next week. So stay tuned wherever you get your podcasts. All right, friends. We good?
We good.
Out? Okay. Thanks all. Talk soon.
Bye, everyone.
Bye.
Thanks for listening. And now for our disclaimer.
This material is for your private information and does not constitute legal, tax, or investment advice. There is no representation or warranty as to the current accuracy of, nor liability for, decisions based on such information.